Sunday, December 18th, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how a gold for oil deal from the Russians would most probably break the stranglehold of the bullion banks on the price of gold. And this is not me saying this. I spoke about this on the 7th of December. You can go up to the cards and click there and you get the video about Zoltan from Credit Suisse. He was talking about this. And the interesting thing he said at the end was this: just as the German industrialist who built a successful business over a lifetime and outsourced only one thing to the German government, energy security, banks have been managing their paper gold books with one assumption, which is that states would ensure gold wouldn't come back as a settlement medium. So what does that mean? Well, this is what we gold bugs have been talking about. Well, me for at least 20 years, and some like Bill Murphy for more than 20 years, how the bullion banks manipulate the paper price of gold and keep the physical price suppressed. And this is what Zoltan is talking about. This is a guy who worked for the US Treasury, who worked for the New York Fed, and now works for Credit Suisse. And he's no conspiracy theorist, so he knows that the bullion banks, they can only keep this game going if no state actor, i.e. Russia or even China, uses a weapon like gold for oil, because that would make gold a settlement currency for oil. And he thinks if the Russians did that, it could drive the price of gold very quickly up to like 3,600 from where we are. I'm not going to go through the whole mechanism. You can listen to my video from the 7th of December. I talked about that. And yes, ever since 2002, when I bought my first Krugerrands, and I've got the receipt here, or the invoice still, from the 25th of June, 2002. And the price was £225 and 45 pence per ounce. Ever since then, I started looking at the market very closely, at the gold market very closely. Of course, at the time, I still worked as a bond broker in the futures market. And that was the core of my market. And I noticed, though, that gold market was very weird. It had always did the same thing at particular times. And then I realized that these so-called bullion banks, which I'd never heard of before I bought my first gold coins, they were involved in this market. And I always thought that there was some kind of suppression or control of the price. And I'm not complaining, of course, because now the price is almost £1,500. But ultimately, I think the control of the paper gold market has allowed the system to get out of control, the financial system, because it has kept the dollar artificially strong for all these years. It has kept interest rates artificially low, and I think that's all unraveling now. And even if we don't get to Zoltan's $3,600 target, I think the fundamentals are very good for gold, and will continue to be, not just for gold, but for commodities in general. And the other thing that I've spoken about for almost 5 years, 4 or 5 years now, is the switch or the move away from the petrodollar, and I've been talking about that since 2017. One of my best videos in terms of views is China Delivers Knockout Blow to Petrodollar Part 1. And I spoke about how they were developing and forming these futures and energy exchanges in Shanghai, and that this would eventually take a lot of capital away and a lot of international trade away from the petrodollar. And lo and behold, just recently we saw the president of China going to Saudi Arabia and signing a deal with the Gulf countries, Saudi Arabia included, for them to sell their oil and gas on these Shanghai exchanges. So it's all coming into fruition, I would say. I said at the time when I was speaking about the demise of the petrodollar that it wouldn't be an overnight phenomenon, because it's the petrodollar and the dollar is like a huge super tanker, and it's very difficult to change tack. It takes time. It's not like a dinghy. So I think that's what's happening in the gold market. Even if the Russians weren't to do this gold for oil deal, I still see gold as a good place to be, and also silver, of course. And it's interesting, though, that because Zoltan mentions the fact that the U.S. is running low on strategic petroleum reserves, and that the Russians might do this gold for oil because they wouldn't want the Americans to get their reserves back on the cheap through India, for example, and this would be a weapon to do that. And yeah, just on Friday night, the U.S. administration announced they're going to start buying back their oil reserves. So I think the commodities markets, the precious metals markets are getting very interesting. We're continuing to see stocks and bonds suffer. It's going to be a bad year for stocks and bonds, but commodities, gold and silver, actually have held up relatively well. And it will be interesting to see what happens in 2023. So with all that uncertainty out there, not just geopolitical, but financial, monetary, and economic, yes, I'm holding on to my Krugerrands, to my sovereigns, but I think there's also a lot of opportunities. Even in times of trouble and crisis, there is opportunity. And that's why today I've partnered with Gold Mining Inc. It is traded on the NYSE, and its ticker symbol is GLDG, and it is a component of the GDXJ ETF. I spoke about the potential in GLDG back in May, and I also own this stock. So in the last year, GLDG is up 20%, while the GDXJ ETF is down about 12.97%, and the S&P 500 index is down 16.6%. And before I go further, I'd like to say that this report is not financial advice, that it is my opinion, and that you should do your own research and due diligence if you'd like to risk your capital. So what has made me decide to own GLDG? Well, first of all, if you look at GLDG's current market cap of $200 million US dollars, out of which they have 20 million shares of Gold Royalty Corp, or GROY. This holding is worth about $48 million. This means that for $152 million, which is 200 minus 48, you get to own 30 million ounces of gold resources and reserves that are on the balance sheet. So you're paying $152 million for 32 million ounces, which equals to just under $5 or $4.75 per ounce of gold in the ground. And if you compare this to similar projects in the industry, they sell for an average of $30 per troy ounce. So this means you're paying 84% below the average market value in the industry when you buy shares of GLDG. So analyst Heiko Ile of H.C. Wainwright has a price target of $5.25 for GLDG compared to its current price of $1.26. So if you flip this equation around and ask yourself, What if GLDG's 32 million ounces of resources in the ground were worth $30 per ounce? Well, the market cap of GLDG would be 32 million ounces times 30, or $960 million, which means the stock would be worth around $6. The other interesting point about GLDG is that you get leverage to the price of gold. In the last 10 years, we've seen gold rally and GLDG do a lot better. For example, back in January of 2016 to September of 2016, GLDG was up 665%, and the spot price of gold was up 22.65%. So the leverage there was 30 times. And more recently, from March 2020, when gold dropped down to like 1450, to August 2020, when gold topped above 2000, GLDG was up 218%, and the spot price of gold was up about 36%. So the leverage there was 7 times. So GLDG also has a number of top class shareholders who have been highly successful in the resource sector, like Doug Casey, Sprott Inc., Rick Rule, and Marin Katusa. And GLDG also has a number of institutional investors as shareholders. And the company has no debt and it has cash on its balance sheet. So why is GLDG undervalued? I myself asked that question. And the reason is because under the leadership of the founder and chairman, Amir Adnani, GLDG acquired properties that were worth around $850 million at the top of the last bull market. And he acquired them for $80 million between 2012 and 2020. And from 2012 to 2019, nothing was done in terms of advancing these projects. So GLDG just sat tight and waited for the resumption of the bull market. But in the last couple of years, the CEO, Alastair Still, has been focusing on advancing these projects and unlocking value for GLDG. And as I said, the company's strategy is to continue to unlock value from its 32 million ounces of resources, so that the market will re-rate the portfolio to be worth that $30 per ounce that is the industry average. One of the projects it's looking to spin off is US Gold Mining, which owns the Whistler property in a highly prospective region of Alaska called the Land of Giants. Whistler has 9 million ounces of resources, gold resources, and that's part of the 32 million GLDG resources. And on its own, if this company is spun off, it could be worth anywhere from $150 to $250 million, just the Whistler property. GLDG also has highly prospective properties in Colombia's Mid-Cauca Belt. So if you'd like to find out more about GLDG, go to the description section of this video and click on the link to GLDG's website. With that, I wish you all a great rest of the weekend. Take care. Bye.